Meantime, I want to get back to SEC Chairman Paul Atkins. We had a little technical snafu. The government shutdown had nothing to do with it, but I made a bad joke about that. It's nice to see you, sir.
Good to see you too, Andrew. Thanks for having me.
So how is this government shutdown affecting you? How do you think it's affecting the markets? I know there's a number of companies that have sought to go public, and I imagine there's going to be some delays at the minimum.
Yes, well, I mean, obviously it does affect us. We have about 4,000 employees altogether, and about only 10% are able to work during the shutdown. But we're trying to make accommodations. Obviously, we're still monitoring the markets and doing that. We're still processing some registration statements and other filings, and the staff is able to, of course, focus on enforcement issues and things that have deadlines and so forth. So we're still working, still monitoring, still doing our job there to protect the investors.
I was going back and looking, and you told our colleagues last week the shutdown, you had stopped trading on 8 foreign companies on the NASDAQ that were indicating manipulative behavior. And I'm curious where that stands today and whether you've been able to work on that given some of the issues this government shutdown might present.
Yeah, well, so that's very important. So there are analysis that indicated, as you said, about 8 companies. This is over a period of a few weeks, but where we call it ramping and dumping. So where there was unexpected and unexplained increases pretty dramatically in penny stocks, basically, from overseas. And so we were able to stop trading on those because of make a finding that it was necessary to do. Been working with NASDAQ and then FINRA as well. So we're trying to police this, but it's American investors who will be harmed by this sort of activity.
You know, a lot of folks that we have on the broadcast these days come on and say there is some form of an AI bubble. By the way, I sometimes say there's an AI bubble of some sort. What I don't know is, A, whether you think there's a bubble, but B, even if you thought there was a bubble, if there's something that the SEC should be doing about that.
Well, you know, markets will be markets, and people should be free, obviously, to invest in what they want to invest in. And so it's not for us to say we're not a merit regulator and we're not the big daddy over the marketplace and over investors. But at the same time, we'll look for manipulative behavior and take action where appropriate. And so, you know, we will, we're obviously focused on making sure that the rules and the laws are being followed.
Right. How do you feel about some of the transactions that are taking place? People call them round-trip deals, circular deals. They appear to be disclosed, meaning we're talking about them here because we know about them. But there are these transactions that people are raising red flags about.
Well, so again, I can't talk about any specifics, but of course, again, we're monitoring the markets and we'll bring actions where necessary and indicated. So, but at any point of time in history, there's always been people who try to do things in the marketplace, and so we stand ready to take action where necessary.
Let me ask you a different question about some of the new products that are coming to market, and a letter I believe you received from Elizabeth Warren and Bernie Sanders. This is expressing their concerns about President Trump's EO that would effectively expand access to private markets, crypto, and other things in retirement plans. What kind of concerns do you have about those products, what they look like, what kind of transparency they have, what kind of auditing they have, and the like?
Well, like as you said, President Trump issued an executive order regarding the ability for retirement plans and other sorts of long-term savings plans to be able to access alternative investments. And so as far as the retirement investments go, we're working with the Department of Labor. And of course, all this is affected by the shutdown, so we haven't really been able to make much progress. But basically, we will be working with the Secretary and Deputy Secretary and others at the Department of Labor, have already met with them, and we will be plotting out a course to study and then make proposals for these sorts of retirement plans to be able to access alternative investments, but within guardrails. So we're not just going to fling the gates wide open. And then on the individual elective investment side, we will be looking at the accredited investor standard, which is a very kind of a hard bludgeon sort of thing as far as trying to determine who's sophisticated and not. Is that still something that we should, have or modify? There are other ways to do things to have some sort of a guardrail around who's able to access those sorts of products.
Can I try out an idea on you? So I'm
Sure.
fascinated by these new sort of venture capital and private equity and other kinds of instruments that would likely be what are called semi-liquid instruments. And actually, I think they are very exciting instruments to a large degree. In the context of retirement, though, I wonder whether they should have effectively a target date on them such that, for most people, they will look like a stock. You could buy them on any day, but the truth is because they're semi-liquid products, potentially you may not be able to all sell them on the same day if you so wanted to. And so while someone who's 20 or 30 or 40 years old might be able to buy them with a 20 or 30-year time horizon without a problem, if you're someone who's a 65-year-old or a 70-year-old, these products may not be your friend in a crisis or a panic or something else. And so I wonder whether they should actually be dated in the context of retirement programs against your age, meaning that you can't, not that you effectively you can't buy them or you shouldn't be owning them at a certain age. Does that make any sense to you?
Yeah, well, so that's building on products that the market has experience with. So target date funds obviously are out there in various sorts of retirement plans. And then we have interval funds, those sorts of things, closed-end funds that have various restrictions on redemptions and so forth. So that sounds like a great way to explore something that, it almost sounds like the date that you have on your milk carton or something like that, best by or best until. So anyway, so that's
and the big other question with some of these instruments is because they're holding effectively private assets that typically don't have the same kind of disclosure requirements as a typical public company, if you will, whether there should be different auditing requirements by third parties and the like that effectively are approving of, or not just approving of, but maybe deciding what the, quote, NAV is, meaning what the valuation of the funds are at any particular moment, as opposed to allowing the, quote, unquote, managers of these funds to determine that.
Right. Well, so we do have, with respect to, the various types of funds out there, certainly in the public sector, mutual funds and so forth, the net asset value is, there's lots of regulation regarding that and how it's to be valued, and FASB and so forth. The Financial Accounting Standards Board has their principles out there that apply. With respect to private funds, it's a little different. Obviously, that's a lot of, sometimes it depends on the governing documents on how the valuation goes. There are boards that oversee it. And then also with respect to retirement plans, there's a fiduciary, a board of directors and trustees that oversees the proper investments for those funds. So with all of this, that is, you've hit the nail on the head as far as valuation and liquidity and those sorts of things. That's very crucial for us to oversee what, guidelines for trustees to be putting assets in when they're for retirement funds.
Chairman, you've been talking a lot about crypto trust in the marketplace. There have been a lot of questions about the pardoning of CZ, the founder of Binance, and then what looks like this deal between World Liberty Financial and the Trump family. And I'm curious, just as somebody in your role, and I know you're in the administration and were appointed by this president, but what you think of that in terms of the credibility issues that, at least questions that it creates in the marketplace.
Well, the president has powers for pardoning, and so his decisions, I think, we obviously follow them, and I think the market ultimately decides what happens to various companies and investments and the like. So, clearly, we are focusing on our obligations as far as overseeing the market and enforcing the laws, and so we will abide by that and obviously go forth with respect to those sorts of things.